The US Treasury is moving to end several emergency lending programs, sparking a rare public rift with the Federal Reserve. The central bank is pushing back after Secretary Stephen Mnuchin asked it to return any unspent stimulus money when the programs expire. Let's get more then with Bloomberg's Enda Curran. Enda, it's pretty rare to see disagreements out in the public like this, especially during the pandemic, where presenting a united front between the Fed and the Treasury seems to have been important. What do you make of it?
It's very unusual, Anna, and like you mentioned, the whole story of greater coordination between central banks and finance ministries around the world has been one of the big themes to emerge from this crisis. And in this case, it's unusual to see the Treasury going after the Fed like this, making the point about asking for this money to be returned for those lending programs. As you mentioned, of course, the Fed has said they think that there are parts of the economy that still need these programs. And we know that these lending channels were certainly important early in the crisis for keeping the markets from freezing up and for, of course, helping the real economy to keep going. And I think it just speaks to a wider tension in the US now. You've got the coronavirus surging. There is no agreement on fiscal stimulus. Now you have the Treasury and Fed going a different way on things, and it all points to something of an uncertain kind of near-term outlook for the world's biggest economy, and of course that has consequences for the global recovery too.
Why is this spooking markets then, Enda? I mean, we all remember back in March and the way that things seemed to be spiralling slightly out of control. People were really concerned about credit markets, about whether they would function properly overnight. We saw the Fed step in, and I suppose it is that fear that we might need that backstop at some point through the winter that spooks investors a little bit this morning. We're certainly seeing a little bit of weakness in US futures attached to this story.
Yeah, exactly, Anna. And even if the initial market reaction hasn't been huge per se, this could be a bit of a slow burn because it might take time before it becomes apparent which part of the markets or which part of the real economy needs these kind of lending programs and needs this kind of money. Now, the Treasury and their part are making clear that they think the markets are functioning quite well, and obviously they think they're at a point where they can make the tweaks that they're talking about here. But I think, though, the overall picture remains one of uncertainty, and like you mentioned earlier in the show, we had the IMF and the G20 both a warning about the outlook for global growth as the coronavirus continues to surge. That's also the case in the US. There is no agreement on the table there over fiscal stimulus either. And I think when you consider what's happening now, it will put a lot of pressure, I think, on the Federal Reserve in a few weeks to respond with yet more policy stimulus of whatever nature, whether it's buying more assets or other kind of programs that it can put into the real economy. So markets will, I think, be digesting this over coming days, and if they think there's going to be no breakthrough in fiscal stimulus, now we've got a divergence between the Fed and the Treasury. It'll certainly, at the very least, add to what is a cautious near-term outlook for both the US and the global growth outlook.